Hey, what's up, everyone? I'm going to complete a quick trade review for this morning's short on NQ. Today is Monday, September 9th. The day always starts on the economic calendar. We need to understand the important times of the day. As you can see that there is no red folders shown on the economic calendar. That means the important time of the day will be the opening time. Since there is no red folder, that does not mean we cannot participate. What that means is we are to be more selective and patient than normal. Knowing that New York Open is our only important time, we want to be engaging at or after the opening time. From the economic calendar, we move over to our bias. Since today's execution was a 1-minute entry function, the time frame alignment used for this trade is the 4-hour as your bias, the 15-minute as your higher time frame point of interest, and the 1-minute for an entry function. From the economic calendar, we move over to our highest time frame to obtain our bias. The way that we obtain a bias is understanding where price is currently located at the time of New York Open. We need to understand if price is located above a swing high, below a swing low, or inside of a bearish FVG or inside of a bullish FVG. You can see here on the 4-hour chart that price was currently located within a bearish FVG. This would give us a bearish bias. Since we have a bearish bias, we would then move to the 15-minute chart to look for higher time frame points of interest that align with that bearish bias. You can see here that there is a swing high. You can see here that there is also a bearish FVG. There are multiple bearish higher time frame points of interest to generate this bias. Therefore, at the time of New York Open, we would begin looking for a short entry function. We would then move down to our entry function time frame to search for our entry function. At the time of New York Open, we are looking for a stop hunt. After the stop hunt, we are looking for displacement through the breaker block. We then need to confirm that the FVG is aligned with the breaker block. That would give us a confirmed entry function. Let's mark out New York Open and begin to confirm our criteria. At or after New York Open is when we look to confirm our criteria. So let's go through New York Open. New York Open begins with a move higher. The first time we get a stop hunt at or after the opening time is when price runs above this swing high. After price ran above the swing high, it failed to displace through the bearish breaker. Then price decided to create another stop hunt because price ran above a new swing high. Therefore, we would have a new bearish breaker. You can see once again that price fails to displace through the bearish breaker. Instead, it decides to go and run above another swing high. Once it runs above another swing high, we would have a new bearish breaker. After price created this stop hunt, it then displaced through this bearish breaker. Displacement is the presence of an FVG. You can clearly see that the 1018 candle created a nice bearish FVG that is aligned with the breaker block. The breaker block for a bearish breaker is the lowest down close candle before the leg up that took liquidity. Since there are multiple down closes consecutively in a row, we use the consecutive candles. Price displaces through the breaker block. And once it finally closes below the breaker block here at 1020, we have confirmed all of our entry function criteria. We are aligned with our bias. We are operating during New York Open. We are looking for a bearish entry function at a higher time frame point of interest. We have obtained a stop hunt. We have obtained displacement through the breaker block. We have obtained an FVG aligned with the breaker block. So anytime after 1020, we would have a confirmed short entry function. Therefore, we would look to enter shorts from the beginning of the breaker block with a stop loss a couple points above the breaker block. We then target 2R as our take profit. You can see that price gave two different entries, one here at 1021 and 1023. After giving an entry, price then moves to plus 2R. During management, there is only two options. We are either taking minus 1R, meaning a stop loss, or plus 2R as a take profit. Price decided to run to plus 2R and we closed the trade for a profit. Once the trade is completed, we then move to the sidelines, protect our profits because we only trade one time maximum per day and 2 times maximum per week. I hope this trade review helped. Have a nice day, everyone.